All right, good morning, good evening, good afternoon. It is the 4th of March. I happened to get myself triggered into a hedge about 4 minutes ago. And so I'm still holding on to some of last Friday's trades. The hedge was exactly 36 pips away from break even. Now break even has been moved because of the hedge. Right? So as long as I'm above that green line, I'm I'm in a hedge position, which is the same size as what I had on the short side, plus a few trades, so that I am actually making money on this side, and I want to be buying support. Right, so a little pullback here. I want to buy that. Right. When I came to work this morning, we were under that line, and it looked as though that line was going to hold. Right. So, if we go to the daily chart, just real quickly, today compared to yesterday, we clearly have a higher high, we clearly have a higher low. We're approaching resistance. Right? This is probably where the hedge is going to turn around and become null and void. Right? So if I go down to my 1 hour, the last European session and Asia session really did very little. Right, the bulk of the activity came in just now. Right, so we're approaching this level here. I want to remain a seller there. Right, there's tons of news this week, not necessarily today. There's very little today. Right, so going down to a 5 minute. We can see how we're making higher highs. Right, clearly, we're not trying to go to the moon. Right, this has moved 21 pips already. If it gets to the red line, it will have moved 25, almost 3 boxes. Right? Normal move. We want to be shorting this. Right? That's why I'm not so worried about the hedge. Right there, I may want to buy that as I'm in a hedge position. Right, I'm just trying to make money on the upside. If we break through 865, right up here, 865 is this red line. If we break through 865, we're probably going to revisit the other red line, which is 890. Right? And that's about 36 pips apart, or 30 pips apart. Oh, 20 pips apart. So, we have our plan laid out. We understand where the trouble is, right? This is 36 pips from the average of everything that I have on here. Right? So the average of all of this, oh, you can see it right around here. I got to take that off. There we go. And so 36 pips, that's where the average is for this pile of work. Right? So while I am above my green line, I have to remain bullish. And if we can get back below the green line, like what we're attempting to do now, maybe I'll be able to close the hedge. Right? And then reset it. Right? This idea here is to pause what's already opened. Right? So it's like pressing the pause button. I'm still responsible for that drawdown. right? I'm still responsible for those shorts. And so if this thing does decide to go to the moon, I can continue to play the long side while I slowly start removing some of the shorts, right? I can remove some of the losers. Typically, you'd want to remove your worst losers first, right? You'd want to remove the most expensive ones, the ones that are least likely to come back. What's this up there? I don't want that. We don't want stop losses when we're hedged. Right. We're just trying to see if that red line will hold us up for today, and maybe we go down. Right. Considering what's on the calendar for this week in particular, tons for the rest of the week. Right. Just today is very light, so I can see today making a high, and then I can see ourselves going down for the next couple of days. Now, this area here looks really good to buy. Right. This area down here, if you're asking me why I want to buy down there, I was looking at this earlier. Right. It so happens that these two previous highs match up perfectly. And then if we can find our way down to 50 or 61, we'd want to be buying down here. Right. So it's a what if scenario. The geopolitical environment is probably driving some of this. If you go and look at gold very quickly, gold is trading at, I think, 2090 or something, 2100. So we're at 2100. Yeah, you know, Putin is feeling cornered. He's threatening Germany and such. Gold is reacting accordingly. All right. Okay. We are approaching that red line. I'm just going to book the profits on this because I doubt we're going to get, oh, I was wrong. I doubt we're going to get past there, and I think my target was past the line. Right, so as I'm standing here, we've closed 2 bullish trades while I'm carrying a whole bunch of drawdown. Right? The drawdown is on pause, so it's not causing me grief. It's just something I have to deal with in time. Right? And here I am attempting or assuming that it's not going to run away on me, and I'm attempting to profit while I'm upside down. Right. So this is the hedge. This has to remain open as is unless the price comes back below. And then it starts to cause me grief, right? This now becomes drawdown. And so if it breaks back below the hedge, I will close the hedge and reset the same trade. Right? So it's when do you close the hedge, right? How do you close the hedge? Because there's this instant when you close the hedge, there's no stop loss. You're open to risk. And so you have to reset it. Right? So if it breaks up, I'll play the break up like we would any other. Right? I wait for a retracement or a pullback, a retest of the said break, and buy it. Right? Otherwise, right now I'm just playing with the hedge in place. If it breaks below the hedge, right, I can continue to trade the short side of things. And this is it here. All right, so when we draw our ladder on the 5-minute chart, right, oops, sorry, wrong drawing tool. When we draw the ladder, we already have the ceiling. We're going to draw a rung, oops. We will draw one rung right there. And how about we duplicate and put one right here. And then maybe one right there, and so on and so forth. Right? Everywhere we see something useful to us, or something that was useful in the past, it may become useful again in the future. Right? I'm just eyeballing it. Right? I could be way, way off, but the market doesn't really care. Right? It's a game of probabilities, not perfection. And so focus on the excellence. Focus on becoming an excellent operator. Become really good at fixing problems and such. Dig yourself out of the holes. It's not that you try to put yourself in the hole. You just have to have the skills to get out. All right, so in this hedge position, I don't want to be putting a short trade up there. I want to be playing bullish up there, right? And I am slightly more bullish on this side. Right, just waiting to see it come back down. I'm doubtful that it will break up. I'm thinking 860s holding for now. Right? If we break this, then we're revisiting 890, which is up there. And then ultimately we might be revisiting 910, which is a little bit further. But I'm thinking we have to go down before we go up. Right? The market likes to inflict pain as much as possible. Right? It's not in the business of giving us free money. It's actually in the business of taking your money. Headphones just died. You should hear the speakers. Right, so you can see now we're back below the hedge. Right, this is the breakout right there. Right, so I'm going to close the hedge at a small loss. Right, if we get back below that purple line there. Right there. So I'm going to close this. Right, now I can trade the short side of the equation. Right, this is a 3-pip trade, and I will reset my hedge. Right, now I have to go and edit this to make sure that it's the right size, and I'll put it back to what it was before. All right, so let's double check. It's at 35, 36 pips from break even. All right, so now I'm on the bearish side, unless we break the hedge one more time. All right, so that's a loss right there. What I'll do is I'll change my size to 01s, because I really don't want to be piling in more shorts on top of the shorts that I already have, right? My break even is already 36 pips. And so if I add one right there, it will not really make that big of a difference, and it won't impact the relationship with the hedge, right? Because I am already oversized on the hedge side. Right, so ultimately we have a goal. We know what we're trying to do. Me personally today, I'm trying to get out at break even on the short side, right, or better. Right. Let's put back to hourly chart. It's easier to see where our goals are. Right. Coming back down here, one last little dip would be nice. Right. Something like what we've done last week when we were looking at the outside range. There's an outside range right here. Right. Are we going to create another outside range? Right? Are we coming down below the lows? Anything is possible in this environment. It's all about surviving. And there's a lot of discretion when it comes to trading your own account, right? I'm floating $300 right now out of 5,800, right? And I've spent about 15-20% of the account on this entire business here, right? It's difficult to do that when they impose limits on you. Right? So it's all about the ability to fix the problem if you get yourself into one, right? Try not to get into a problem, and then you have the skills to fix them if you do, right? It's all about becoming a better trader over time, right? We're not relying on luck here. Right? This week should be a blast. There's tons of stuff on the calendar. Looking forward. Mr. Powell, I think, speaks twice. Oh yeah. Tons of volatility. I wouldn't put it past the market to be, in the middle of its range for the fireworks. All right, so I'm only hoping to close a couple of bearish trades here for 3 pips, 3 pips. All right, hopefully before we trigger the hedge again. If you're starting from scratch this morning, you'd be starting at the extremes, right? If you go to your daily chart and you start from the top and you work your way down, comparing today with yesterday, you've made a higher high at multiple levels, right? That's taking out a lot of stops here. A lot of pain is induced right here. Right? What's the size of this? 28, so 3 boxes. An average is 48. We're missing 20 pips still. Are we assuming it's coming to the top, or will this reverse and give us 20 pips to the bottom? Right? Are we coming back to 815, 810 or 815? Right, that's possible. Right? Look at today compared to all these other days. We have room to roam here. So let's look at that again. Intraday, right? This ladder that we built. Which way will it get used? Right? These are all action points you get to add or remove from here. Bearish ticks coming through. Average 1 minute bars are 1.5 pips. We're approaching the bottom of the hour. Let's see what comes up next here. If we get triggered in again, we have to manage the upside. If we stay below, we can stay bearish. I'm just going to tweak it ever so slightly, just above that, just above this area here. This area right there. May mean nothing. We'll see in a minute. So there we are again on the bullish side. All right, if we break the high and have a retest of the high, a pullback, and a retest of that break, we can buy the retest of the break. Right, if we get back below this purple line here, we'll close the hedge. All right, all I'm doing is pausing the bearish side from accruing more drawdown. Right. You'll notice this is pause right there. Right. The drawdown is paused. All right, so here's a break. A little bit of a retest, and we probably would buy that. Switch back to O2s. Pull back. This is a little bit of a retest. And I'm buying that right there. All right, so I'm just going to try to make bullish money for the time being. It may lead to nowhere, right? It may just lead us right to that line right there. And then we're coming right back again. All right, the idea is to pause this. And if I can continue to make money, then I can eat into this. At the same time, I can start removing my losers, which would also lower the drawdown dramatically. Yeah, I think the move up on in gold, this is it here. This move up in gold, thanks to threats by Mr. Putin and against Germany and stuff, uh, this is having an impact on the US dollar. Right? And you can see the US dollar right here coming back to support. However, the yields are still bullish. So that gives me a credence to believe I need to remain bearish on my euro. That's why I'm still suspecting this red line will hold. Right? This is why I'm willing to play the hedge side of the equation instead of booking a pile of losses and giving up on my 2 day of work. Right? It's surviving. I'm engineering an exit that would be better than the whole bunch of 36 pip stops. I'm just going to book this one here. Oh, I was going to book it. Oh, right there. It doesn't seem to be wanting to go anywhere. I'm really reluctant to go on the long side because we're so close to this. Right? I'm happy with the hedge because it is 1 or 2 mini lots bigger than what I already have, or it was. And so this is what we're working with right now. All right, let's see what comes next here. It's all about the next move. Keeping that in mind keeps me from going crazy sometimes. What came about on Friday was unexpected. Right? This move right here, that was unexpected. Right? And as such, we're in fix-it mode. All right. We're just trying to survive being above the green line. If we can use that to make a little bit of money, just tiny little trades here and there, continuing to book profits, win while losing, some people call that. There's a million ways to come up to a happy ending in this business. Right? Depends on how you go about spreading that risk. We're in control of all the parameters. We don't control the source of information. Right? So how you go about parsing that information, filtering that information, coming out with less to little pain. That's the game, right? That's the aim of the game. There we go. If I could back below that purple line, all right, which is this zone right here, I'll close the hedge. All right. Even with hedging, you have to take losses, right? It only buys time. It doesn't make the problem go away. I wouldn't put it past the market to go up one more time, one more push. Anything is possible around here, right? It is 865, 866, the target we're looking for. right here. Yeah, today will be a slim day, slim pickings. The good, the bad, and the ugly. Best part is you don't have to lose even when you're wrong. Right? You have a chance to fix the problem. Use logic, use the other 96% of your account to come up with a solution. Right? Within limits. It's all based on probabilities and price and time cycles. Remember those pesky time cycles? They told us to ignore them because apparently they didn't exist. Gold is just going mad today. 2101. A lot of geopolitical risks on the horizon. The market is feeling it. Right. Yields are still going up. Dixie is holding 103.70. Right. If the dollar index breaks 103.50 or so, then we're in trouble. Right, which would be this area here. Oops, let me just pick this line. 103.50, right around here. All right. If we break this zone down here, then we're in trouble. All right, but there's a long way to go here. Right, this is still bullish. Right. Higher highs, higher lows, higher highs, higher lows. This is still bullish. Therefore, the euro should still be bearish. All right, so a probability assessment tells us nothing's changed. It's how we survive this. Like, how do we spread our money? You saw me a minute ago. Oh, now I have to close that hedge again. You saw me a minute ago. Well, now twice close the hedge. Right? I'm not reopening any more shorts. I will, however, put the hedge back on. All right, buy, stop. And I'm just going to go in and change its quantity to match what I have. I'll put it at 99. Right, 99. And I need it to be about 36 pips away from my overall position. 37, close enough. Close enough for government work. All right, this is all government work. If you're waiting for perfection or precision, you're in for a rude awakening. It's a game of perfection. Right? Look inward. Try to be the best trader you can be. All right. Keep an eye on your 6 o'clock. Keep your head on the swivel. This thing's gonna give you whipsaws this week. and head fakes and a lot of false moves. I can see it already. Right? If you look at the calendar, it's just mad. Let's go back. All right. So ISM tomorrow. Fed Chair Powell, Jolt, PMI. More speeches. Thursday, we have more U.S. claims, U.S. jobless claims, non-farm payroll, press conference. Powell speaks again. On Friday, lots of European news as well as U.S. news, non-farm payroll, right? So extremely busy week this week. Right? Yeah, this is it. All right, so we've stayed alive, we've survived, we've even made some winners, and I closed my hedge twice. Right? Overall, the account has not really lost anything, or is it not gone down much? Right? The yellow line has gone nowhere. Right? We're just in the period of drawdown, which is the gap between the gray space there. Right? So that gray space up here. Starting the month of March, let's go revisit how we did last month. Previous month. So that's the month of February. 1,385, about 1,200 trades put through. We lost about 120. We're making pips. Moving on up. Let's see if we get re-triggered again. Right? It's really the idea of pausing the drawdown. If I can pause the drawdown, I'm in control of the outcome. I can eat away at the drawdown with many small wins. Ultimately, the goal is to add to it as little as possible, right? Work it off. Right? This was an event that should not have happened, right? Well, ideally, I should not have been trading the news event, but getting stuck here is what caused all of this. Right? It's a non-event, it's a non-issue. The process remains the same. We don't need to go rent new equipment to dig a different hole, right? In this case, we don't need to go rent new equipment to fill the hole, right? The same shovel that I use every day, I'm going to use to fix this $300 drawdown.
So the Biden administration opposes a bill to ease securities regulations.
It's understanding where our own limits are, personal and financial, monetary. It's a blend, right? You have to work in concert. You have to operate your account, not just one trade. You're managing a book. It's a book of trades. Right? So feel free to balance that whichever way you see fit. The prop outfits do serve they do have a place, right? But if you're trying to, learn to trade, compound an account, and so on and so forth, you better to do that in your own environment. Once you have your skills down pat, once you've got yourself all figured out, operate within the rules of somebody else's money and requirements, right? But for now, sort out your own discipline under your own your own umbrella. We're remember we don't want to lose focus on this red line there. What that would be $3 exactly. So, right, we have to be conscientious of that. There we are again, just about ready to get triggered in. Maybe, maybe not. Maybe, maybe not. Zoom in. Close, but no cigar. Tight spreads. I don't think there is a catalyst for this move. I think, well, in general, I think it's being pushed about by gold, but it's normal market behavior. This is well within the range. You know, we've done less than 30 pips in 17 hours, 18 hours. It's something's bound to break out of this box one way or the other. It may not be today. It's coming, right? You look left, the volatility has been winding down. We've been cranking up Jack in the box. At some point, it's going to come at us very quickly. Always be on the lookout for the unknown. A day like today on gold, right? Just for, for reference. This is gold right here. Oops. All right. That's a crazy move. That is a crazy move right there. An average day on gold is about $30. So I'm sure a lot of people are looking at that and wondering, where's the crack in the globe?
So according to Handelsblatt, German finance minister says the leak of the recordings is a wake-up call and shows that Germany is in Putin's sights. Says we see a hybrid attack from Russia.
Speak of the devil. Let's trade what we see, stay alive. If you get painted into a corner, there's ways out of there. And some of that may be booking losses. Hedging is not risk-free. It's actually doubling the amount of trades, right? It's doubling literally the amount of risk you're willing to take on. It's an engineering challenge. I'm just curious My mind's eyes looking at things like this all the time. I'll just reset that to there. What if this is the top and I put this box right there? The hedge has not been triggered yet. No. If you're a seller, now's a good place to sell. We've passed the bottom of the hour. We're near the top of the day. Anything up here is worth selling into. Yeah, I think my hedge is about 36 pips away from my overall monies. Yep, perfect. I do have to remove the stop loss on the hedge trade though, right there. There we go. So we're just waiting to buy time. The money is not going up or down unless I start closing some of the shorts. All right, so I have a couple of targets around here. And then I can manually close some of the swings that I built last Friday. I can close them manually as we approach the break even. No stress, no panic, no rush. It's all in control. Right? Think of when you're trading one position at a time or one side at a time, you're managing one book. What I just happen to be doing here is managing two books. I started with a bearish book, and all of a sudden I opened a bullish book, so now I have both, and I just closed the bullish book twice. I'm still operating the bearish book, right? They're independent of each other. If you can sell, you're selling into resistance, that green candle right there. I'll switch to micros and take one. Micro lots. Tiny, 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 tiny. The alternative would be, we get hedged and this thing just takes off and then I end up remaining hedged for 36 pips or more, which would bring us up to like 09 or so. Oh, I think I just got triggered in. Nope, not yet. Now I did. All right, so conceivably, I could be stuck like this for a while, right? If I measure from here, this is the top of the box. A break back below this level here would probably make me want to close the hedge. Right there. I want to remain in the hedge above that breakout area. All right, so today's been a lesson in hedging. All right, my hedge position is one or two mini lots bigger than what I have opened on the short side. All right, so that pauses the drawdown right here. I'm now floating 360 or so, 362. Right, I'm floating 360 out of 5,800. Right, and we just have to be diligent to be able to manage this up here. Right, if it just comes crashing back down, you want to get rid of that hedge trade. Right, if it keeps going up and up and up, you want to use it as a starting point to make money on the way up. I guess I'll be able to post, yeah, I guess I'll be able to post Friday's video if I take a picture of all of this and show how our trades remain open. Right? So one weekend later, everything remains open, and now I'm at the top end of the range. Right, and we're well below the hedge. And this is the kind of trouble we get ourselves into when we start to hedge, right? Stuff like this. I'm expecting a bounce around here so I can close it without ripping myself off hundreds of dollars. Right around there somewhere. One more green bar maybe. Or a couple more green bars maybe. We'll see. 10 seconds. 8, 7. All right, so I get one more green bar and I'm going to close the hedge off and reset it. Maybe not. Maybe I'll keep it open. Looking at the time of day, we have the UK fix or the London fix coming in about 12 minutes. I'm going to leave the hedge on in case we test the red line first. Looking at this here. Come on. Why can I not grab this? There we go. Yay. Well, we did not lose our shirt, that's for sure. We did not buy a new shirt either. But that's okay too. Right. Ultimately, that red line, I'm thinking, will hold. And we'll be able to get back from there. And that should be around the 65 area, 66. The top of the box that we're in. All right, so above there. See if we can target the top of the box. If you're asking where this red line comes from, look left.
So in 10 minutes time now, at the top of the hour, a report that Fed's Harker is due to be giving a TED Talk style presentation on the economic impact of higher education, followed by a Q&A in Washington. A text is expected for Fed's Harker, again giving a presentation on the economic impact of higher education, so unsure how much monetary policy talk we'll be hearing from Harker.
Minus 21 Celsius in the mountains today. It's chilly out there. Boy, oh boy. Come on. Average bars are 1.6. Minuscule. This last 2 weeks have been a joke. Volatility has been dismal. It's like we're drifting at sea on a raft, baking in the sun. A few more minutes, top of the hour. Usually is good for us. The waiting, the waiting. Hourly chart, what does that look like? Not quite. Come on. I want to be able to at least close a winning bull trade. That'd be kind of nice. We've had one, two, three, four. We've only had four winners today. But on the positive side, we haven't lost anything. We haven't lost the account, right? We closed a
It's been
couple
5
of.
minutes time now at the top of the hour. Feds Harker is due to be speaking in a TED Talk style presentation, on the economic impact of higher education. This is followed by a Q&A in Washington. The text is expected from Harker, as well as, again, a Q&A as well. But in the pre-recorded remarks, or in the pre-recorded speech, unlikely to be much monetary policy talk, as he speaks on the economic impact of higher education. Again, there is still a Q&A section as well.
Right, there's the 50 and the 200 on the 4 hour. There's that red line. I can turn these off because I don't use them here. I'll close that 2 pip trade right there. I'll keep the hedge open. Right, if we have a retracement, another red candle, maybe I can think about buying it. Right? But I had to consider the time of day and usually what happens after bankers close, right? So ideally, I don't want to pickle myself in both directions. This actually goes a little right there. The joys of trading, huh? It's not always fun. Sometimes it's boring, sometimes it's upside down. But usually the sun shines after it rains, so I'm looking forward. All right. Que sera, sera, like my mom would say. All right. Come on. My mother-in-law and my father-in-law are visiting Vietnam right now. They left about a week ago. They've been sending all sorts of really nice pictures. Looks awesome over there. A lot warmer than here, that's for sure. You notice we're not doing much trading right now, right? We're really just in repair slash control mode. Right? Targeting break even as a result of last Friday's news event. Right? As a result of this right there. Boom, boom. All right. Using small microscopic trades gives us the luxury of spreading them out
So as
like
expected, Fed's Harker does not comment on monetary policy or the outlook in his presentation material.
it gives us a luxury of spreading the risk like over a larger distance, like butter on toast, right? Instead of placing one trade and expecting only one outcome, you can see here how I have many trades and I expect the average outcome. I control all of this. I'm gonna put, where are we? How far am I from the red line? 2 pips. I'm gonna put 1, 2, 3, 4. I put 4 up there, so that brought my break even up. Where is my break even? Hello, break even. Oh, the hedge is triggered. I can't calculate break even with the hedge on. So I was at 36 pips. It's here somewhere. $36 pips. So 925. 925 is where I need to get back to. 925. So I'm looking for a move in the order of 36, 37 pips. All right. And so now that I've put this position up at the top, I will get rid of this, get rid of that, get rid of this, get rid of that. And then if we break below the hedge, I can remove the hedge and reset it above the high. And that's why I added those extra trades at the top, so I can bring up my break even. Right, 65 is that level we're looking to hold right here. And we'll see how we behave around there in a second. We're just getting ready to take the hedge off in case we break below the green line or that diagonal line there. Gold is still pushing up. What, 2109, $2,109 for an ounce. Wonder what the dollar index is doing. Dollar index is at support, hasn't budged. Yields are still up. I think there's a few bond auctions on the calendar for today. We'll have to keep an eye open for that. I'm going to take the hedge off. And that booked us a little bit of money, and I'm going to reset it above the high. Oops, it opened on my other monitor. Sorry. There you go. All right, so I reset the hedge above the high right there because I did move my break even up when I added those extra trades there. Let's make sure break even is above 65. 65 right there. Right. The hedge is above 65. There's 36 pips exactly. Perfect. My purple line was off. All right, so now I'm still floating this and I remain bearish. Right, it's because I'm so close to that red line. I expect a bounce off of this. If I get a break, I eventually get triggered in, and now I'll probably stay in until we get to there. Another 4 boxes away. 3 boxes, 2 boxes, 2 boxes away. All right, so if we do break the high and this does not rotate, then I'm going up. And that happens to be the next highest high if you go left. Right there. All right, there's a method to the madness. It's just one step at a time. Those are bullish ticks coming through. There we go. We got triggered in again. Is this legitimate? We'll see. We shall see. Yeah, it's like I put it ever so too close. What's my drawdown now? 392.
Russian oil refining totaled 5.44 million barrels per day for February 15th to 28th period.
Ba-ba-ba-dum. Let's see if I get a chance to play the bullish side a little bit more. Like so. By 3 pips. Yeah. Wouldn't put it past the market if it doesn't try to give us 890. Wouldn't be the first time. You know, it creates damage for people. Right? This is the dilemma that we have, right? We're in this stupid area here, stuck between this zone and this zone. Right? So I have all this range, and we have, let's get rid of this. And if we look even no, smaller and under the microscope, we have resistance and support all around us. So, define your risk, play what you see, trade it as you see fit. Right? There's ways to make money in both directions here. Just understand where your risk is. In my case, I've been gradually taking a bigger bite of the apple. Right? It's because I still have conviction in my bias. I still have probabilities that are leaning in my favor. I'm looking at the Dixie. Right? So when I'm looking at the Dixie, it still points favorably for my outcome. And so I have to manage. I have to take the heat that's, in the kitchen. A retest up here and will allow me to reset the hedge, above the top. All right. Remember, going back to having two books. If I'm hedging, I'm now running with 8%. All right, so here's that one. And here's that one. And I reset it above the top. Oops, too many zeros. We are still moving $5,800 with a drawdown of 380. We've touched the red line. What's our average day so far? 33 pips on an average of 46. Right? This could keep on going. I could keep repeating this over and over and over. Right? It's because I'm positioned for a bearish outcome, and so I'm positioning for bearish exit. Right? Even on the bullish side, the bullish side of the equation is only temporarily pausing things. Right? It's not there to make me rich. Right? It's there to pause the bleeding. Right. If we zoom in, I bet you we made a slightly higher high. Right, so there's that red line, and sure enough, we made a slightly higher high. Is it for real? Will it keep on going? No, we shall find out.
Fed bids for 3-month bills total $311 million, and Fed bids for 6-month bills total $275.6 million.
That's what we want to see. Red candles, big ones, huge ones, many, many of them.
According to a joint statement, Canada and Australia are to enhance cooperation on critical minerals extraction, processing, and refining.
Right. And this is why we don't want to be stuck holding the bag up at the top. Get out of the hedge, but reset it, right? You have to keep protection in place, but you don't want to be pulled to a deeper depth because of it. Yeah. Perfect. Wow. That was not a very profitable day today. We did manage to save the account, which is, I guess, good, or if not a better outcome overall. So I kept moving up the break even, keeping it 36 pips away, all the while spending a little bit more of the account, spending a little bit more of the account, keeping a 36 pip target, because understandably average moves are 36 or less. And so the max that I want to be reaching for is 36. If you're long, now would be a good time to close all of them. And Giannis has done that. Good job, dude. We're long from 8430. Good. Yeah, yeah. That's awesome. You got most of this move. It's fantastic. That's the name of the game. You know, if we trade for the next move, right? The next move is what gets us out of our position, not gets us into it. And so I'm curious to see what comes next now. It's the move we've been waiting for. I made a higher high, and now we're making lower lows. This is the resolution we've been looking for. Give me 2 seconds. I gotta take my pills.
It's 11:30 a.m. Eastern Time. The US sells $79 billion in 3-month bills, prior high yield of 5.255%, and a private cover of 2.93. And the US sells $70 billion in 6-month bills, prior high yield of 5.13%, and a private cover of 2.92.
So the yields are moving the market. That's awesome. Beautiful. So, surviving is key. If you're trading a prop account, more than likely you would have been in trouble on Friday already. Right, so you would have been booking your losers as per the news event on Friday. If you're trading in this area there, seeking break even, this is the only chance to find it right there, right? And then if you're trading Sunday, Monday, this was our only break even, right? But because I do have this bigger picture in mind, I am here typically multiple hours per day with many, many students. I'm trading a bigger environment, higher ceiling, a lower floor, and I'm using more of the tools in the toolbox to get out of trouble, right? This is not a prop account. This is just, a small random demonstration account. So, right. We're doing this on the 1 minute chart because in theory, what we're doing is in a fractal environment and it can be repeated on the other time frames. All right, so when you know you're right, you know you're right. You have to dig your heels in, stand your ground. Understanding where you're wrong is key, and we've highlighted this back here. Right, this, how many days ago was this? 1, 2, 3, 4, 5, 6 days ago. Right, so anytime below this, we kind of have to be on one side of the equation. Anyways. So here's our ladder. And here's us going down the ladder. And let's see the next few rungs we have coming up. 1, 2, 3. All right, so now I've already built the position, right? I built the position since Friday. I can't open anymore. I've already, maxed out trying to solve the problem, right? We've already spent 2 days of work in one session, or I have 2 days of work still open, right? So I have to close 2 days of work here. Right? I have to close 2 days of work. If the market pushes higher, I stay hedge and I stay trying to fix the issue, right? Ultimately, it's because I have conviction in this level there, that higher high that we have to remain under. The one I was just showing you a second ago. This
At
one here.
11:30 a.m. Eastern Time, the US sells $79 billion in 3-month bills, prior high yield of 5.255% and a prior bid cover of 2.93. In the US sells $70 billion in 6-month bills, prior high yield of 5.13% and a prior bid cover of 2.92.
Yeah, stay short if you're short. Okay. If we keep going up, if we break the high, the next target is like we mentioned before, 2 boxes away. Right? And then beyond that, keep stacking boxes. That's how we measure things. On the flip side, if this is an outside range, like it has been for the last little while, coming back down here is not out of the question either. Right? Look at an average week and estimate where an average week can take you. Right? An average week is 125 pips. If we stay under last week's high, what if we go 125 pips in this direction? $125 takes us to 740. That would just be an average week if we were to fall from today. Right, so looking at this, do we think this is going to the moon? Or is this at resistance and coming back down to test maybe some support? Right, so the easiest way to, approach is to use Fibonacci. Right, if we've pulled up this much, pulling back to 61 is not out of the question. And a little bit more, and a little bit more, and a little bit more. Right, these are all good ideas. Right, if you're long, you're probably trading in this direction here and targeting 38%. Right, that's the kind of stuff we have to pick a side and trade what you see fit. Right, on a weekly scale, this right here is very, very, very telling. Right, today's the first day of the week. What if the rest of the week is unable to go up? Well, that means we can turn around and go back down. Right? It could be split between the two. Maybe we go halfway down and halfway back up, and halfway back down, halfway back up. Or maybe we just fall straight down. Right? All these alternatives are viable. Our job is to create plan B, C, and D, because plan A makes you money. Right, so if that's the week, what does it look like on a daily?
Shortly expecting the results of the 3 and 6 month bill auction, I'll lead with the 3-month bill high yield.
Right, so putting it exactly on the top, we had a slight overreach. Right, last Friday was inside that bearish bar. Today we found the ceiling, and I'm hoping we can now go and test for a floor, and by which case we would close all of our open trades since Friday. Remember, it's a mean reverting market, right? And the mean we tend to operate off of is the intermediate time frame. That's where that 36 pips comes from, right? You're surviving a 4-hour candle, but you're only trading half of it for 2 hours, right? 2 out of 4. What is an average 4-hour candle today? I'm curious.
The Trudeau government is to release
23.
Canada's budget on April 16th.
Right? 3 boxes is an average 4-hour candle. Here's our famous hourly chart. There we are. All right, so some of you bears have the ability to close some trades right now. I'm going to keep mine open, and the targets that are there will close by themselves once the price reaches the specific goals. The rest of my position is targeting the white line that I usually have right here. And so I'm not in the mood of taking undue risk today. I just want to finish what I have already open. Okay, so I'm gonna leave you guys at this 1.5 hours of recording. I will be updating both videos onto YouTube. All right, so I'll upload Friday and today. All right, enjoy yourselves. I'll see you guys tomorrow. Trade safe, trade small.
6-month bill high yield 5.105%, 5.105%. Bid cover ratio 2.59, 2.59. The US sells $70 billion in 6-month bills and awards 96.19% of bids at high. In the US 3-month bill high yield 5.24%, 5.24%. Bid cover ratio 2.65, 2.65. The US sells $79 billion in 3-month bills and awards 18.59% of bids at high.
This concludes the recording. Bye-bye.